Hello, everyone, and welcome back to another Pepperstone live event here over on YouTube. Today, we'll be discussing everything to do with the latest market movements, and boy, oh boy, are there quite a few. We're covering stock markets, we're covering cryptos, we're covering commodities, and of course, currencies as well. We're glad to be here. It's been a very volatile couple of sessions, and it could be the beginning of some serious moves. So, my name is Thomas Atkinson. As always, I'm joined by Tyrone Abella. Tyrone, it is a serious week. We've got earthquakes. We have huge market movements that are starting to come through, and obviously the daily 20 moving average on a few pairs is starting to get tested. Also, hope everybody is safe in these earthquakes. It's pretty bad from what I hear. So yeah, have you been?
Good. Yeah, welcome everybody. Hopefully everybody is safe and well. It looked massive week, obviously. A non-farm payroll week is always generally big, but I think this particular one is seeing a lot of volatility already early in the week, and that has been actually, generally speaking, looking for the last, Tom and I have been doing this for a long time. It's pushing 16 or 17 years now, and for the most part, non-farm payroll weeks are generally really lackluster, quiet, and nothing actually happens. But over the last few months, we've noticed that the week leading into non-farm payroll has actually been quite volatile, hasn't it, Tom? And this week's no exception. We've already seen some very important levels hit. And boy, oh boy, to say that there's critical zones on a lot of the big indices and currency pairs at the moment is probably underplaying the importance of them. So looking forward to getting into it tonight and seeing if we can identify any opportunities.
Yeah, so we'll do that in just a moment. As always, let's give a shout out to some people joining us here. We've got Joe, Vincent Tay, Will and Gabba, Royston, and many others. If you can give it a thumbs up, that does help us out. And it shows Pepperstone you like this content. So it's always great to see your comments down below as well. We do read every one of them. All right, we'll see you in just a moment and we'll get into the charts. Okay, so I think the best place for us to start, Tyrone, is the US 500. Now, yields are the major concern this week with supposedly reinflation becoming part of everyone's storyline. And as we know, look, there is always a reason, and the reason sometimes is in plain sight. I think when we have a look at yields in just a moment, you'll see that it hasn't been a new thing. It's actually been going on for a little while. We've had energy stocks doing very well, metals, gold, something we've discussed on this show. We will be talking about that later, and US oil and Brent. Both moving in a big way. So some of the best trades that we've had over the last couple of weeks have been in these pairs. Been very bullish gold, very bullish, of course, oils in general. And there've been some nice trades. So hopefully some people have been watching and paying attention. We also had copper that really started off a lot of this as well about, I think, a month ago, and where we really got this rotation coming through. Anyway, without further ado, let's have a look here at the US 500. So the big thing that I instantly see here, Tyrone, quick dissection, and then we'll go through this 20, which I know you'll want to discuss. We've got a high, we've got a low, we've got a higher high, and we've just seen a lower low. Now, we're hitting into a zone here that is multifaceted. And I mean, there are so many things synchronizing. There's Fibonacci synchronizing at this level. There's some structure, which we'll look at in a moment. And also probably an underutilized indicator that a lot of people don't use, which is the anchored VWAP. So you can see here, I've taken an anchored VWAP right from the low, or even you can take it from some of these other periods. And what it's showing you is that I like to take it from the low, by the way. So to me, this level here or this level here should be where you're joining the anchored VWAP from. There's a lot of stuff going on, including options sitting around this 51.75 to 51.85 level. I'll just quickly break it down so you can see it on the smaller timeframes. This is the structure. This is also the key structure for the bulls to break now, and we're in the middle of nowhere. So we know this is where the buyers seem to be, Ty, and this is where the sellers seem to be. How big is this 51.80, 51.75 level for you, considering it's also a daily 20 moving average?
Yeah, that level between the 51, or the 5180 to 5200 level is probably one of the most important zones of definitely 2024 and probably a lot of 2023 as well, mainly because of what can actually happen if that level gets broken. I think the anticipation, look, the buyers are there and they are waiting. Okay, there are people who still think that this market's going to 5500 and they're waiting for an opportunity to buy. We've been here before where we've seen a pullback to a level where, it's getting close to the 20 moving average. It's at a role reversal zone. It's at a round number. and MACD's down. Everything points to the fact that it's about to sell off, and then boom, off it goes. So we're looking at it with trepidation, but in my mind, and look, the words patience, react, and don't predict. This is one of those very, very important times, because if and when it does eventually break through, the trades are going to be plentiful on the way down. I think that's what's really important, that if you're patient enough to wait for the correct signal rather than anticipate what's actually going to happen and try to predict it, you're going to get yourself in trouble a lot. If you had have done that all the way up, you would have been chasing your tail quite a bit. But yeah, this is a very, very important zone. I'll be watching it very, very carefully. I look forward to waking up in the morning, Tom, to do the US close stream to actually see what the US market has done, because I just feel that something's going to happen, and it's going to be good.
I'm super excited for this, and there are several reasons why. If you think about this market, it's been pretty much continuously, other than around here, it's been generally making, this is where we had the lower low as well, but we didn't break that 20 moving average, which we'll look at soon. It's a 2-hour chart. We've generally seen higher highs and higher lows the whole way through. And then we have not seen any lower low switch until up here. So it's been a long time since that's last happened. And this could correlate with fairly fast movements, I think, to the 50-90 level. If we get underneath the 50-90 level, we're probably moving into negative gamma environments. So what that really means for everybody out there, Ty, is that we're moving from a hedging environment that's mostly bullish to a potential hedging environment that's mostly bearish in terms of options. And if we do start to get down to those levels, could we get to 4,700? It is possible. I think that there are several buy zones, though, that people will be trading. And really, what this is doing is giving us opportunity. Volatility breeds opportunity. We don't want to necessarily be bear biased or bull biased. So let's look at another breakdown to a scenario that I could see playing out over the next 24 hours. And this would be a drop in the market, a bounce off this level, anchored VWAP, options, 51.75, 51.80, demand, so many different technical analysis techniques here, and then a V. Now, if this occurs, I would say that, like it's always been so far, Ty, the daily 20 moving average may be holding up, and we're looking at further rips. If we do just kind of rip higher today, for the bears, they're going to be looking around 52.40, 52.50. And if we do manage to get above this point, I feel like maybe the bulls are in control again, and they're going to push it back to 5,300. Would you tend to agree with that synopsis, or do you have a different play?
No, I agree. If that happens, I agree that I think it will push higher up to 5,300 if we get that V bounce from there. But it wouldn't want to go under this 20 moving average, I tell you what, because if it does and it closes there, it's going to be a very, very different scenario. And look, one thing I actually think, my personal belief is that if we do get that series of lower highs and lower lows on the daily, there are some buy zones all the way down, but I think that 4,800 is actually a very real target. In fact, that's one of the places. Yes, and also a very strong role reversal zone from previous touches. Now, the one thing we probably have to emphasize is that even if it went back all the way to 4,800, that is not a market meltdown, okay, in any way, shape, or form. That is just a correction that the market actually needs. A healthy market will correct. It doesn't mean it's Armageddon. It doesn't mean that it's GFC Mark III or anything like that. It just means that it's the pullback that the market needs to realign itself with the. In fact, it actually is a stronger market when it does pull back. I mean, I'm sure you'll agree, Tom. A market that goes out of control on the way up and doesn't pull back properly is a market that comes down quicker than it should when it eventually reaches a topping zone.
I think there's a quote for that, isn't there? It's like a market that's going bullish eventually ends, but it doesn't end by going sideways. If it's parabolic. A parabolic market doesn't end by going sideways. That's right.
And we've seen that a couple of times, only very briefly in gold, actually, where gold has shot up to a high, and it's retraced so quickly that if you didn't take profit when you're literally on the minute, you would have been giving away $20 or $30 instantly. So although, I mean, gold has kept going, but you know what I'm saying? Like, it does come down. It can come down very, very quickly if it doesn't correct properly on the way up. So really, to me, a 4,800 pullback would be a great level for everybody to sort of reset, realign, and then maybe look for a push higher. But that's healthy. It's not a meltdown. That's
I don't know if I have a chart here, Ty, that I can share, but I have talked about it quite a few times. if you actually correlate with all of the previous big bull cycles, whether it's a 1970s one, a 1920s one, a 1950s one, any of those major bull cycles that went on for a long period of time, a lot of them did start to struggle over the next kind of 3 to 6 months. Then what they did though was they kept going. And I think Tyron brings up a great point. Even a correction down to 4,800, 4,700, we're still well entrenched in a bull trend. So
Absolutely.
don't let the bias go. I mean, the markets are generally bullish. That's just the statistics behind them. So we look for trades. Obviously, a trader doesn't care whether it's bull, bear, or whatever. They're just looking for key zones. And I think for an investor or for a swing trader, you just got to be careful. The bears can be very, very quick. The bulls can be more sustained, can't they? Especially in the stock market. Now let's have a look at yields quickly, because I think both yields are very important to have in your charts. This is the US 2-year yield. If you do have a Pepperstone platform connected to TradingView, you should be able to put in the term US02Y and grab it onto your charts. Now, this will be the one that a lot of people are watching this week. They're looking at this 4.77 alert. You can see it's kind of floating around. Is this distribution? Is this accumulation? I don't know. We'll see. But this will be the one. If it breaks through, you'd have to expect that daily 20 moving average not to be able to hold, and potentially the markets would obviously be moving down from that. So 4.77, certainly worthwhile having an alert. The US 10, 20, 30 years, they're already starting to break out and go above, Ty. And you can see that this is already predicting, something going on in the future in terms of growth. So we've got the 4.3 here. So this is higher for longer kind of playing out. And that's, that's what took the market down last year in what was it, July into, was it August? I think it was August into October. This time around, it's been very resilient. But as we know, non-farm payrolls now while it's a lagging effect, it's kind of showing whether the Fed's got more work to do or not, doesn't it?
Yeah, no, it is very interesting. Do you want to actually highlight that, Joel? Can you bring that? Can you overlay the S&P 500 on this chart? That might be a good example as to how they can work together.
Yeah. When it's disconnected, we certainly can.
Yep.
So if we just put the SPX on here, you'll notice that for a long time, so that this is basically the S&P 500 overlaid. If we think about when yields were going up, especially up at about this point, that was where we got that kind of, it's too much. The markets couldn't handle it, and we got that pullback. Then what happened was, of course, yields started to drop off like a rock. This was the pivot theory that still seems to be playing out. And you could see the markets absolutely loved it. They were like, yes. But somewhere in here during that consolidation, things completely changed on yields. So what this ended up leading to is the markets kept going up and yields went up at the same time, a disconnection of the, let's say, inverse reality that we were seeing. Now, it's not unusual. Markets sometimes can do this. And I think it's important, actually, that you bring up this Ty, because the price action remained bullish through this whole trend. You might have said, well, I want to be bearish. But in your investments, in your swing trades, even in your day trades, you really just had to kind of go with that trend. When it came back to those daily 20s, it was the bull side. If the worse it felt, and this is often the time with trading, the worse the trade feels, then sometimes the better it is. Now, I'd argue at these points, I don't think it feels that bad to be trying to go long.
Yeah.
However, that probably means it's a bit scary. So I think it's just anything. If you're playing the stats, you're playing your replication systems.
Yeah, no question. But I think it's definitely a time to be cautious. And I think that we won't touch on the indices too long because we've spent a bit of time on the S&P already. But what we might do...
We have to. It's big.
We have to. I know. But just to keep on the indices theme, I'd love to just visit the 2000. There you go. And if we can go to a daily for a moment, I just want to sort of highlight another really important zone that we've been talking about in the streams, and that is the channel, the ascending channel that has been in play for quite some time. Now, look, there's a similar channel in the S&P 500, albeit a narrow one. But in recent history, the S&P 500's 50 moving average actually looks like a solid state upward trend line. This one is a little bit different, as you can see. But we are fast approaching another very, very important zone. Although, the Russell's not at all-time highs, obviously, like the S&P is, or has been very, very recently, it is actually at a critical zone in the sense of where it's at. Because it really, if we get an S&P break of the 20 moving average in that 50 or that 5180 level, that's going to almost assuredly break the 2000 here on the Russell. And that's going to break that this ascending channel down. And the move down on this one could easily be down to that sort of 1800, 1880 level. So really, yeah, very, very bad. Very important to just monitor this, because sometimes this does move before the S&P 500 actually does. It can be a little bit of a leading indicator. So even if you don't trade the Russell, it's not a bad trade to have an alert. It's not a bad indice to have an alert on that. If key level gets broken, sometimes you can jump into it fairly quickly and potentially catch a bit more of a move on the S&P 500, because it is not sometimes or often actually as fast to react as the Russell does.
So let's look at the US dollar. So a lot of currency traders here, of course, and you'll notice the US dollar has been strengthening. This weekly close was bullish. It's since then been able to pack in a little bit more punch. I think that because position-based traders would have actually started to go a little bit more to the positive side on dollar, although non-farm payrolls will ultimately be the decider, I'd be bullish on dollar. My personal opinion. We'll see what Ty's trade of the week is. Maybe I'm going against him, guys. We'll see. But yeah, basically, maybe I'm going right with him. This is a level that I think is very, very important. And what I really think is potentially going to happen is if we manage to take this high, we're probably going to 105.50. I think that further move, there's not much on the left-hand side in terms of structure there. So there's a good chance that this is actually a fairly fast move. So non-farm payrolls really could create a very nice volatility event for markets. Now, Ty, I know you want to lead into your trade of the week this week. Is that right? So that's in the euro. Do you have comments on the USD that you want to do before that, or should we just jump straight in that euro?
I think we can. Well, look, I agree. We're on the perfect
Not
page here,
vetted,
Tom.
guys. I
I'll say
didn't know
that.
what he was going to say.
Yeah. No. The 50-50 is my ultimate target for the dollar index, or short term at least, and really that's going to spell the trade for my trade for the week. So we'll go to the euro USD now, and
Sure.
look, as we saw, once the dollar we talked about this for a few weeks now, that if the dollar index broke that 104.20 zone,
Yeah.
it was going to spell a break of the 108 on the euro, obviously, and we did see a decent sell off, but I'm not actually convinced that the euro is actually finished. And what I'm looking at the moment is, yes, a little bit of a mini pullback. We can see here it was a very, very good trade. What I might get you to do just quickly, Tom, is to go to the 1 hour and the 4 hours. We'll start with the 1 hour first.
1 hour. Okay.
Yeah, 1 hour. And what I see there is what we call in the office a trading bonanza. And a trading bonanza is about 100 opportunities to take shorting moves on a stock that's or an industry or even a currency that is just in a very falling, heavy momentum downtrend. You can see there's many, many opportunities on the 20 moving average. But what's happened most recently, obviously at the bottom here, is we've seen a bit of a breakdown of that move down, and we can see a little bit of a resurgence up. We've got a higher low on the 1 hour. Now, what I'm sort of thinking here is that if we can't break past this 108 again, and the dollar index does start to strengthen, I think that it's got a very sharp move down to the 107 in it. I think 107 is the ultimate target for this one short term, and it hasn't quite reached it yet. It gave it a very, very solid attempt. What we really need to see is a breakdown of that 1 hour. That 1 hour needs to reverse. And it's trying hard to rally from this zone. You can see there, it is trying hard. It's trying really, really hard to rally, but there is resistance right in front of it. And if that resistance is strong enough to hold, the first trade's down to the 107.30-ish. That's a very easy scalp. But after that, I think that, the 107 is calling. And that's going to all correlate, of course, with a dollar index move up to the 105.50. Both will, if the dollar index goes to 105.50, this will be most definitely a 107. That's pretty much a certainty. So realistically, I'm looking for basically a corrective move from this move up. I think that the downtrend isn't finished, even though it's trying to establish itself to move up. But again, we're patient. We're not going to predict what's going to happen. We're going to wait for it to lower high again. We need a lower high, lower low sequence on the 1 hour. And if we get that, I think it's a solid trade down to 107.
Yeah, I like that idea of up to here. I just kind of popped in the most traded zone of this supply.
That's exactly the right place. Yeah.
I love that trade there to the short. I mean, it's like anything. Of course, you're playing stats, you're playing replication, but it's certainly a stronger philosophy being in the direction of that 1 hour trend, that 4 hour trend that's also in there. So yeah, nice one. And 107 is your ultimate target for this. Let's have a look at the weekly. Is there even more potential? I mean, if the weekly ended up closing down, I mean, you can see here there's so much at stake. Previous weekly
Yeah.
closures around this level. I think if it closes below Ty, we could be going, even lower down here.
Oh, yeah, most definitely. I think from a scalping standpoint, 107 is the target. But if we get a close, especially a weekly close below 107, yeah, there could be another 100, 200 pips in it quickly. The euro can move very, very quickly when it breaks key zones.
There's also an excellent trade to the long side in the previous session. Now, that's not always a great trade, but that particular one, due to when it took the time, was quite a nice little scalp to the upside. Now, very cautious. This is that role reversal zone for the euro. All right, let's jump on over to gold, everyone's favorite precious metal at the moment, and mine included. Look, really great rally here. We spoke about this on the show a few weeks ago. We talked about the flag pattern. We also talked about the opportunity that was literally there only, geez, it doesn't seem like too long ago. I guess it was 2 weeks ago as well, which was this Friday. And of course, we talked about that probably on the Wednesday as a possibility. And it's just rallied and rallied and rallied. Now, because this is a flag style pattern, you already have completed really what you expect it to do initially, which is that 2300. It's gotten very close to it. So I think that gold could slow here a little bit, Ty. The trend is still up. I wouldn't fight it. I certainly wouldn't be shorting gold myself.
No.
I'm mostly long the pair, but I have seen it everywhere. It's even it's trending on X. It's the last time I saw gold trending was a long time ago, and we've loved it for a while. But it is literally trending on X. And that always makes me think, well, let's follow the price action. But still, I don't know if it's a great level to be jumping on in unless you're scalping.
It's one of those ones where the trade's kind of already happened. Like it's Look, I wouldn't be shorting it with my worst enemy's money. I'm not going to lie, because that could be a very dangerous game on something that's so strong. But on the long side, I think it's getting, if we can say it, a little bit long in the tooth in terms of how much more it's got before it does eventually pull back. I'm not saying this is the end. I mean, I think once 2300 gets broken, it's going to be probably setting its sights on 2500. But I wouldn't be the first person to that war. I think I'd just let it play out now. That flag pattern was perfect. It played out beautifully from a technical analysis standpoint. Came back, tested the top of the flag, and then off it went. But that target pretty much has been hit now, and I would be very, very just careful at that level, because sometimes, when you're running, I'm not sure if you've ever missed a train, Tom, but if you're at the station and it's kind of leaving, and you run, and you're about to get on that last carriage, but the platform's nearly run out. That's what gold feels to me like at the moment. Like it's kind of
Is that when you jump on the back and crowd and train surf?
Yeah. No, it's not a video game. This is real life we're talking about. And you fall flat on your face is how it works.
I have actually, I saw on the internet the other day, there's literally a few countries where people literally train surf. I was like, wow, but yeah, I agree. The dangers are real. So don't want to be jumping on that. Gold leads into silver, Ty, and silver's been it's actually done pretty good percentage-wise, but usually silver does what you would think like a 2-to-1 for gold in terms of percentages. It's like the crazy, it's the Ethereum to the Bitcoin, or the wild cousin to gold itself. The silver here is a very, very heavy trade right now. I think less people are talking about silver, more people are talking about gold. How do you see this? I already liked it a lot last week. Specifically, if you actually come in, we'll do a little bit of a learning lesson here. There is a level where you can see here the resistances of the wicks, and then we go and we close above this zone here, and then we rally on through. So we have multiple wicks in terms of and closures that have gone high. We've gotten above the 26 level. And there's not much on the left-hand side. So let's go to a higher time frame to understand why this momentum is here. Have a look at this. So when we get through the zone, again, weekly will be important. At the moment, the daily looks excellent. Obviously, the trend and momentum is on that side. There's not much stopping it to 28. And I think silver's maybe overlooked, and certainly I guess you would say my technical trade of the week with some caveats in it. And the caveat is that I think you should be following very closely the smaller moving averages, and specifically looking for those 2 steps forward, 1 step back. So far the 20 moving average on the 2 hour has held it up once. We could go smaller time frames, have a look at 1 hour. The 1 hour may be the better one. So we'll see how it reacts if it does come down here. If it reacts positively, that will be that 1 and that 2. So I'd be looking for the 20 moving average up towards here. But I think a few people in the chat seem to like the silver side. And Will and Gabba says it's trending as well on X. Oh, no.
Oh, no. Yeah, that was an extraordinarily important break.
Trending?
Yeah. Very, very important break of that zone. No question about that. And you've got to go out a very, very long way to find that resistance. Like you say, Tom, now that it's broken that level, you have to go out many, many, many months to find any resistance. Before any significant resistance before 28. So I can see there is a very, very strong case for it to just continue on. And it's not necessarily dependent wholly and solely on what gold does either, by the way. Gold could still pull back and this could still move up. It's they're not that correlated. They do exactly the same thing. Otherwise, silver would be at 35. So don't be surprised that it's taken a long time to break this, by the way. This has been a story that's been playing out for a very long time too. Like it's not like we've just broken a zone and it's da-di-da. This is a very, very important zone. I mean, I've got it all the way back to April. Actually, funny enough, if you go back to April of 2023, we're basically at the same level. So slightly higher, but very, very similar. Silver, very, very.
Let me just load that back up again. Which April? Yeah.
So you can see the peak in April of 23 was very, very similar. We have broken it. We have gone higher, but that did pull it up after a monstrous move. So just something to keep at the back of your mind that we have been here before in the same month.
Oh, that's true as well. Yeah, it does. Yeah. It did have, but it had an epic run. That was actually a lot more epic in terms of a raw.
Oh, huge! It was monster.
This one's had to pull back. It's done a lot of.
This has done the right things. Yeah, this is that pullback that we're talking about.
Exactly. I feel like it's got some legs in it. Yeah, you've got to be careful, like anything. But to me, especially if the weekly close, it's a big deal.
I think it's a really perfect example of what we were talking about, Tom. If you could just go back to it for 1 sec. It was what we were talking about earlier, in the sense that first move, that monster move that we were talking about. See how it literally did not pull back until it reached that high. And then it came back, tested it again, then failed. But this time, what it's done is it's gone up there, attempted it, and come back to a very significant pullback. And that gives it a lot more momentum on the way up. I'm a lot more confident on this breakout than I was in the previous one. Why? Because it's come back and done the right thing. What a healthy trend should do. Come back, pull back to a good level, and then reattempt the break. And that break generally has a lot more momentum and a lot more buying power accompanying it. So I'm a lot more comfortable this time than we were last April.
Yeah, I'm liking the silver a lot more. It's got many better technicals there. Here's an interesting one as well. So since what is this? Only the 2nd of April. This is a combo that you can also do in TradingView. It's why we like using the platform. Obviously, Pepperstone offer this as an option for you guys. And you can see here, I put Pepperstone's silver, versus gold as a combo. And what this is showing us, everyone, is it's showing us the strength of silver versus gold, which has been frankly terrible. And the ratio is quite low. So if we actually go out to a weekly, there's been times where silver has done even worse. But if you look at the last couple of years, and what you might notice is that during that August period, during that March period, funnily enough, and during this period here, silver is so far underperforming gold, and it's back to a ratio where it's tended to find more support. So again, showing that silver is quite far behind. Now, if silver was up here at the ratio, that'd be a different story. It seems more like the kind of resistance or the more fair value. So silver may have some catch up to do. And well, this is basically the proof in that idea of catch up. I love long short strats. I love thinking about them. And this is a great way of visualizing that. So excellent.
It's a really good
US oil, Ty, US oil. So in general, oil has been breaching. And this was one we had focused on in the last week of, I can't remember if it was my trade of the week or not. But anyway, we talked about how it was now or never for it. And this was the key here. Wednesday, literally pretty much the same time we were analyzing it live on the show. So you can go back and have a look at that. And this was exactly where a few people were looking at it. We needed it to hold this low. I love that. As soon as I saw this candle here, it made me very, very happy. It tried to go short and then it bulled up. And I was like, you know what, it's going. And it rallied and it rallied and it surpassed my dreams of the oil. barrels, and not a very super dream, but pretty good. And went to 85. Now I don't know if oil's stopping here. I think this could go to 88 a barrel. Again, we go to the weekly. We have a look at what's in front of us. Not much resistance and supply until the 88. We've hit one of the major daily zones, which is here at 85. So maybe a breather. My favorite position here would be to see oil do some accumulation, maybe drop down, then rally through. And if it did that, it's done the right technical sign, hasn't it? And then we move towards the 88, which would be really, really cool.
Yeah, no question. After last Wednesday, I feel like Jed Clampett off the Beverly Hillbillies, to be honest. It was like just an absolute golden oil trade. I loved it. The 85 was 85.50 actually was the target for me. And I agree. I think some sideways action here would be fantastic. Because I think 88 is very, very attainable for oil.
Yeah.
I don't, whether it can make it in the one move without a bit of sideways action. I mean, it technically could, but I wouldn't trade that. That wouldn't be my preferred trade. But I think if we saw some sideways action here and even a bit of a small pullback, just allow it to accumulate some more buying power, I think up to 88 is a very, very possible scenario. And that's not saying it's going to stop there either, but I think that's the next target. I think with trades, especially when you're trading oil or gold and things like that, then they're often not something that you would just put in a portfolio and set and forget. I think they're definitely tradable commodities, and you want to be in and out of them. I don't think that you want to be sitting there. It's probably not the ideal from the perspective of earning income off an investment. The only income you're going to make on these is actually the movement, and so really that they are very, very tradable. So. And that's why I say, look, do we believe that oil could be back in the 90s very soon? Probably. It may well be. But I wouldn't be setting a long-term position and just saying, all right, I'm going to sit there. I think I would rather trade that. I think it's far better to actually trade in and out of oil and gold. And oil, and that's why I say 88, even though that may not be the final destination, 88 would be a really good target for it. But I think we need to see a little bit of consolidation. I wouldn't want to be just jumping in. The golden trade's already happened. That was from 80 to 85. Everyone's happy with that. And look, if it pulls back to 82 again, you've got that rectangle drawn there. That would be fine too. I'd be very comfortable with that actually. No problem. Pull back down to 82, 83. Reload from there. That would be perfectly fine as well. And that could be the perfect launch zone up to 88 as well. So don't be afraid of a pullback is probably what we're trying to say today. Pullbacks are healthy for trends. They always are.
Yeah, it's good when they're still in the right zone. Speaking of pullbacks, let's move over to the cryptoverse and talk about Bitcoin. It really needs to hold this zone. I'm just going to put a Fibonacci on from the last move, and you'll notice there's a 61.8 fib. This is why I call the golden pocket. It's a mixture of a Gann number and double Gann number and 61.8. And this area here is very, very important for Bitcoin to hold. I feel like if it doesn't manage to gain steam here and it moves back down to a new low, I do not like this bulls have to hold level. Now, this was a big zone for us in terms of bullishness the first time, and we had a lot of evidence to support that data. Now, if it breaks under there, I think down below 60, will it go? And then, nasty underneath that. There's almost nothing holding it up underneath 60K. So underneath 60K, to me, from a technical standard, the next level of equilibrium is at our most traded zone here, which is 51.8. So really, if this did happen, I'd be very worried for Bitcoin throughout this structure because 51.800 is the next stop. Now, let's go into the smaller timeframes because there is some bullishness occurring here, Ty. We'll go as small as a 15-minute chart so we can really understand the structuring. And what Bitcoin did just before was it came down, it took a new low. And you'll notice there's this big wick here. And we do love wicks because wicks hold excitement or orders in the market. And that's actually a fairly bullish little sign, at least on the small time frames. We went underneath these. Someone will have had a stop loss there. They've effectively been hunted. The market's then pushed towards the upside. Obviously, there's some form of supply here as well that may be tested. But I could see why people would be, at least at this stage, looking towards pullbacks into bull. And if we get through 67.2, yeah, I think the recovery on Bitcoin is starting to really happen. So very important zone. I like what I see on the 2 hour, the 1 hour, the 15-minute from this structure. But if it goes under here, X, big X, not good.
No, 100% agree. And if you go to and if you want to know why, potentially, can we just go to a daily for a moment?
Yeah, sure. of course.
on Bitcoin. The thing that, from a technical standpoint, you've got to look at it from what do we see? Take away the BTC USD signal, look at the charts and look at price. Okay. What we see is a big move up. We see a pullback and then we see a lower high. Okay. That's what we've really got to focus on. Forget about Bitcoin, forget about cryptocurrency, no matter what it is. We're looking at raw price action right now. We're looking at candles only. Okay. We've got the lower high. Okay. And that's why this level is so important at 60,000, because if it does break down past that level, it's going to give us the big giant lightning bolt that generally reverses the bigger time frame trend. So we've seen an extraordinary move up. But if we get a break below 60, what we're going to have is a lightning bolt down with a series of lower highs and lower lows. And as you can see, the gap between the most traded level, which is around that sort of 51,000, and that watch reaction here level that we've got marked at the 60,000, there's effectively nothing there. So there's basically air. So if we do get a breakdown of that 60,000, not only is it going to confirm the lightning bolt, it's actually going to signify a change in momentum, a massive change in momentum on a very big time frame. So sometimes you've got to put the symbol away and just look at the raw price action, because really that is in essence what technical analysis is. And in the bigger picture, it needs to hold above 60 for obvious reasons, because if it doesn't, you can see why that cliff is a $10,000 cliff.
Yeah, there's just no volume shelf there.
Yeah.
So 51K is possible. This right now is bullish from what we're seeing on the smaller time frames. A new low, don't like that. And then that could push in for some negativity. Now, I believe Bitcoin's done some decent pullbacks before halving events. And I'm not sure on the exact stat in terms of how much the percentage is. I'd have to have a look at my charts again. Wollongabba says here it's generally halved down to 30% retrace. And if you actually mark that out, I can tell you that's exactly this level. So if you actually have a look here from the top to the bottom, 30% is straight onto that structure of 51.9 or 51.8. Now, will it happen? We'll let the price decide, but there's not much on the left-hand side in terms of shelf. And one thing about Bitcoin is when it goes through a low liquidity zone high, it just jumps.
It jumps and it can get there. So I think that would be if I was a betting man, which I'm not. I would be saying that if we can get below that 60,000, I think it's a really good target to aim for. But hey, Wollongabba says we can trust him, so why don't we give him that? We can give him the floor when we talk about Bitcoin every Wednesday. Come on in and tell us what's going to happen, because if you say we can trust you, why wouldn't we?
I love it. long time viewer Wollongabba. I love it. It always gets into the chat. By the way, it's that time again. If you want us to have a look at a few pairs, we can do so for you. So you chuck them in the chat. We've got well over 50 people joining us here live, many hundreds that obviously or thousands that view it afterwards. So do give it a thumbs up as well. It does help us out. And I've just realized I was going to put this on the bottom of the screen. Anyway, that's okay. So the VIX over here, we've got the 15 level for the VIX. I think this is a chart that we also should be watching this week. And that's because the VIX, or the volatility index, many people consider it dead, Tyrone. And that's a level where I usually say, well, if you think the VIX is dead, probably not. But because of the rise of one-day expirations, that has suppressed it for a while. We do know that a lot of people have been shorting the VIX. Now, I don't trade the VIX. I don't think it's worth trading. I think it's very expensive to do so. But it's a great tool that we can use on the platform, Pepperstone platform, to understand volatility. So if you're a day trader or a scalper or anything like that, you're really looking for a high VIX. High VIX, lots of vol, lots of big moves, lots of excitement in markets. 16 is a big key level. So I've got an alert here because I think that if we do go past 16, it could create like a squeeze on the VIX. And if you've ever looked at this chart before, you'd know that VIX goes wild and then it comes crashing down pretty fast after that. But when the VIX goes wild, it can be on season. So that would be another one to be watching this week.
Yeah,
quite closely.
And look, it stands to reason. I mean, look, the S&P 500 has been going sideways, although it's been creeping up slowly. In truth, it's been going sideways for quite some time, and that's going to reduce the volatility. Of course, when it's not moving in big percentages, the volatility is being completely eradicated from the market. So, of course, it's going to affect the VIX. So, I as much as people might call it dead, we can't have a big move without a VIX spike, Tom. That's a guarantee.
Well, yeah, we can have a big move up, but generally not a big move down.
Yeah, exactly right.
Qs, Ty, Qs. I just wanted to mention this. Now, Qs is obviously NASDAQ, so NASDAQ would be your trade on Pepperstone. The Q is just a popular, for anyone that doesn't know, it's a popular ETF for effectively the NASDAQ. But why I bring it up is because it's showing us here not just the futures action, but generally the action during the trading day. And you'll notice that recently it's been very dull. That is, it's making a series of higher highs, but very weak higher highs. Now, there's a saying of don't short a dull market, and that's pretty true. Usually, dull markets are a bit scary to have a go at. But you'll notice here that we have a gap up and then a gap down after 1, 2, 3, 4, 5, 6, and 7. So we have what we call an island reversal. Now, this is considered a bullish or bearish, depending on the direction, obviously, techniques. So you can see here in the direction of trend, island reversals to the upside, they've been doing very well. It has happened before. The most notable one that we had was over here, where we got an island reversal to the downside. So you can take it with partially a grain of salt, but it is just another sign of markets starting to weaken. Another one that I think a lot of people aren't focused enough on is probably the weakness here in what was once the biggest stock in the world. I can't believe I'm saying that. What was once the biggest stock in the world, 2.61 trillion. Let me just have a look here in NVIDIA's size, 2.24, and Amazon is 1.88. I guess Google and Meta would be, Google. Oh, okay, 1.8, 1.93. So Apple is it still the biggest world? I don't even know. But what it is damn big. And this one is starting to weaken heavily. So 168 is starting to look very, very nasty. I specifically look at the weekly here from the time frame, Ty, because the weekly shows some nasty rejection wicks. You'll notice here we have long leg doji, another indecision candle that comes off the most traded zone, another indecision candle, and at the moment, potentially weakness. If that closes below, I think it's another warning sign. I often call this the canary in the markets. If Apple starts to weaken, often the rest of the market comes afterwards. And you can go and have a look at synergies where Apple has weakened first, then the rest of the market is actually toppled. So that's one. And the last one is bonds. There's no doubt that everyone should be looking at junk bonds this week. Specifically here, we've got high yield junk corporates. This is often consideration of risk on or risk off in markets. So risk on or risk off. Here we have a consolidating market. It's coiled. What happens after a coiled market breaks out, Ty? Can it be fierce?
Absolutely, it can. Most definitely.
Wollongabba says, I like Apple around here. Yeah, I mean, for an investor or a dollar cost averager or someone, maybe they like the fundamentals and what they're seeing. I think from an Apple trade perspective, it's notable support. Is it a clear support? Yes. Is it a clear demand level? Absolutely. Is it a clear structure level? Yes. But the problem is if we don't have, I like to buy the V tie, which generally means that I prefer to see the structure and then I have this patience and I react to the structure. I'm not going to necessarily predict, oh, yeah, that's a great sup. Let's buy it.
Yeah.
Now, sometimes you can do that when the market's wild and you're looking at your long-term stuff. But when you're trading, I always like to go with, let's see some actual action. Let's see some momentum playing out in the field.
Because the downside for it from here is very ugly.
Yeah.
It's pretty ugly.
Risk is easily defined. Yeah. So your risk in this case would be that you have pretty much a stop underneath these lows or underneath here. So easily defined from that aspect. Today we're down. One other thing you could do is look for it to push back up and then define it underneath the low. Look, risk reward. There are trades around these types of ideas, and you lose a lot, but sometimes you'll get like a 7-to-1 or even a 10-to-1 style trade stock. Here's some questions coming in here, Ty. Royston has a question. It says, what is your view of CHF versus, I can only assume as JPY, as long-term bear trade if it breaks 165? All right, so let's have a look at this. So CHF / JPY is the trade question. And, oops. This is Swiss franc, yeah? I guess it's JPY versus CHF JPY. There it is.
Yeah.
Don't know why it didn't come up before. Strange. All right. Well, yeah, why didn't that come up before? Oh, maybe I didn't. Uh, oh, I don't know. Maybe I put the combo in. I think I put the combo in. That's why I stuffed it up. There we go. All right. CHFJPY. So the question is this a long-term bear trade? Oh, okay. So we start here in the weekly. I always actually like to start in the monthly. So let's start in the monthly together. Typing in all sorts of wild stuff there. So this has been a very heavy bull trend. So what is your question? If it breaks 165, could drop to 148. Okay, so you're trying to pick a top here. It's always a bit dangerous. 165. Why is it that level that's important to you? So weekly here, I certainly think this candle is telling, don't you, Ty? Big structure, comes up, hits it, someone just smashes it down. Central bank intervention or something like that is a
Yeah.
huge smash candle. I tend to find those usually quite negative, frankly.
Yeah, when you got a couple of months of wick action like you've got there in that rectangle, like it's pretty serious. Like you got 2 months there of absolute war at a very very key level. I mean, it's at an extraordinarily high level. That wick came and tested those bottoms. I mean, look, I agree that it looks like it's pretty toppy. Yeah, on the
Mm,
weekly, like we're trading below the 20 moving average, and it has tested the that previous support, or what would have
mm.
been support with all those wicks there. So
Yeah.
yeah. I mean, it's potentially from a long-term perspective, like we're looking at a very big long-term chart there. It's starting to sequence down on the daily. We can see that. Starting to see a series of lower highs and lower lows. I think the 160, I mean, mark
No,
could we just mark out, can we mark out the 148 zone that he's talking about?
no, sure. It's so low though. Far,
Just
far
very
away.
low.
Yeah, that's basically reversing the whole thing.
Yeah,
For
right.
me,
Yeah.
the first target would be more like this
Mm,
163. I feel like the 163 is what it's going for. I mean, it's made a new
yeah.
lower low. It's rejected off here. Technically, it's short already. So it's just going to be scalps towards the short
Yeah.
side.
The
I don't know
163
if
would that
165
indicate
even
that
matters.
yeah, that sparks my interest. I think the 163
Mm,
would be a very good level to aim for. Look, could this be the failure point and see it completely reverse?
320 level.
It's a
Mm.
big expectation to go all the way down to there.
Yep.
But I think 163 is very possible. And probably likely if we continue, if we see a couple more lows taken out here, I think that 400 odd pips is probably where I would be. That's my playing field, I think. I do like
Yeah.
yeah. Yep.
I love the reaction off this. I've seen that trade
Mm,
many, many times before. To me, once it takes a new low there, generally I would be short the pair. And that in itself is
mm,
lot of knowledge. The next one is though that at the moment, as long as it makes a series of lower lows and lower highs, I
yeah,
don't really feel like much is stopping it before here. Now to say
yeah,
140, I can't say
yeah.
that. I
I would
don't
be
know. I'd have to
yeah, I think you gotta break this down into two parts. First of all, get it down to 163, trade it down there and see how it reacts from there. Does it find support there? Does it break
mm,
through and test that support from below? A lot of things can happen at that level, but I think we'd know a lot more at 163. So I would probably be looking at that and saying any more weakness, and I think the 163 is definitely a potential target. But I would reassess the move at that point, see what the market does, how much support
mm,
it finds there, how much accumulation happens at that point. But if it breaks through that level quickly and then comes back and retests it, that's another scenario again. And I think that could lead to further weakness a lot easier than before it even gets there. So I'd probably break that down, Royce, and just look at it. Look at it with a fresh lens at 163 would be my tip on that one.
yeah. I like the supply, like the level, like the structure that's creating here. Again, if the longer it sits here, if it then breaks down, that's pretty negative. And the only thing that would make it positive is it instantly pushes back up and then gets back above 168. That's probably where you'd have to be like, well, oops, I
Yeah,
made a mistake. The market's gone the opposite way I thought. But considering the weekly and the weekly matters to me, the rejection is fairly good technically. So,
yeah.
yeah, good luck. Hopefully it plays out. And as Ty said, the 163 is key. All right. Very good, everyone. Well, thank you very much for joining us for another week of Around the Markets. We're covering, of course, stocks, commodities, cryptos, and currencies every week. We go through the majors that are happening. We answer your questions. We love your comments. We love your thumbs up. So definitely give it one of those. And I think that this week is all about really starting to see some volatility come back into the market. VIX 16 yields and watching these trends unfold. Non-farm payrolls, 8:30 a.m. New York time on Friday. That's New York time. So make sure you have that in your calendars. That's always a very important one. Non-farms matters more than it has over the last couple of months because now the Fed is actually looking at whether they've hit the economy or not. And there'll be a lot of interest rate decision stuff around that time. There's clearly a lot going on the markets, Ty. It's great to see this vol come back in. Great to see so many different trades and commodities moving again, which has been so long a time since we had commodities back in the spotlight. So it's great to be here and talk about it with everyone.
Perfect. No, thank you very much, everyone, for giving us your time tonight. We look forward to seeing you next Wednesday, but keep safe. And as we say, hopefully everyone is safe and well. And we look forward to seeing you next week. And just be mindful that it's a very big week for trading. So keep your vigilance about you. It's not a time to be setting and forgetting, Tom. That's for sure.
Yeah, no, it's. I think it's time to, as Druckenmiller says, sometimes his opinion changes from week to week. And this could be one of those weeks where we have to be pivoting all over the place. But be shut. Well, it's true. I've been pivoting like the Fed, but Druckenmiller knows, guys. He knows. Anyway, we'll leave you with the outro. We'll see you next Wednesday. Join us. Links in the description down below. Make sure to sign up so that you always get alerted when these go live. And it's awesome seeing you all here this week. Keep trading. Stay passionate about it, guys. And keep working on your mastery. You never stop learning and trading, investing. And that's what makes it amazing. It's stimulatory. And I love markets, and I've been doing this for a long time, even though it may not look like it. I've been doing it since I was probably 16, and I'm double that now. So plus now, Ty. Anyway, thanks everybody. Bye for now. Catch you.
Thanks everyone. Bye.